Welcome to the deep dive. Today we're looking at something, well, it's a pretty quiet but really seismic shift happening in the UK.
It is. We're
Right.
seeing the UK's mortgage market officially rolling back a decade of, post-financial crisis caution.
And it seems to be coming from the top down.
That's right. The Financial Conduct Authority, the FCA, is pretty much explicitly encouraging banks to take on more risk.
More risk. So the goal is what exactly? To widen access to homeownership.
Exactly that. Widen access and hopefully inject a bit of vigor back into economic growth after years of really tight restrictions.
So our mission for this deep dive is to unpack what that means for you. Who are the winners here? And what new vulnerabilities should we all be watching?
Let's get into it.
Okay, so let's start with the basics. Who is the FCA actually trying to help with this shift?
Well, the focus is squarely on three groups. First, you have your first-time buyers who've been struggling with affordability.
Right.
Then the self-employed, anyone with a lumpy or variable income. And third, older homeowners and pensioners who want to tap into their housing wealth.
And we're already seeing the effects of this, aren't we?
Oh, absolutely. Even some minor easing earlier this year allowed lenders to offer, around £30,000 more to the average house buyer.
Wow. Okay.
And the market's responding. Net mortgage approvals hit their highest level of the year in September, and total lending is up something like 22% this year.
So the credit is definitely flowing faster.
It is, no question.
Let's talk about those first-time buyers. I saw that a big part of this involves pushing products like part-and-part mortgages. Can you break that down?
Yeah, so with these, you're only repaying part of the actual loan during the term. The immediate effect is that it lets buyers stretch their budget much, much further.
Because the monthly payments are lower.
Dramatically lower. And it's big, but consumer advocates are already sounding the alarm. People like James Daly at Fair Finance.
What's their main concern?
That encouraging such high borrowing creates extreme vulnerability. I mean, if house prices drop even a little, these buyers are highly exposed to negative equity.
So the risk hasn't vanished.
Not at all. It's just been shifted. It's now explicitly on the household.
Okay, so that's the risk for new buyers. What about the other groups? You mentioned people who were just completely blocked before, like freelancers and gig workers.
Right. This is kind of a fix for what was a market failure, really. So many of these borrowers were never insolvent. They didn't fit the rigid box-ticking criteria that came in after 2008.
And what about later life lending? That seems like a huge structural opportunity.
It's massive. Look, the UK is sitting on roughly £9 trillion of housing wealth.
A staggering number.
It is. And at the same time, you've got about 43% of people who aren't saving enough for retirement. The FCA wants to connect those two facts.
Using products like equity release to unlock that capital.
Exactly. To potentially reduce the number of what you might call forced downsizers in retirement.
So when you step back and look at the whole picture, it really feels like a total rebalancing of the risk equation, doesn't it?
It really does. For a decade, policy was all about protecting the banks, protecting the institutions. Now, the priority seems to be access and growth for the individual.
But again, that risk is just being redistributed.
Precisely. It's moving from the financial institutions onto individual households and maybe onto future market cycles. This isn't necessarily a signal for a massive boom.
But it's a clear change in direction.
It's the clearest signal we've had in a decade that those demand constraints are, well, they're officially being loosened.
So if we were to boil it all down for our listeners, what are the three key consequences here?
I'd say number one, access is widening, especially for the self-employed and older borrowers.
Okay.
Two, borrowing capacity is increasing for everyone. And three, risk has fundamentally shifted back to the household level.
Right. A huge shift from the last 10 years.
Which leaves us with the final big question, I think. Given this decisive move away from a decade of caution, how will this new balancing act between access and risk actually shape the UK's housing cycle over the next few years? That's what we'll all be watching.